Hey everyone, how's it going? It is Wednesday, April 24th at 3:21 p.m. So about 2 hours and 20 minutes after the close. We're not doing this live today. Obviously, this is recorded after the market closed because I had a lot of construction things going on around me that was just too noisy for me to be able to record or do anything live. But we're doing the recording now, and the way that the market went today, well, it went pretty much as expected. Not exactly as expected, but very close to as expected. The S&P 500 traded up pretty close to that EMA 20, close enough that we'll call it the EMA 20 region, and then it rejected down. Now, is this the come up and bump and then bounce back that we expected? The answer is maybe. It could be. But a lot depends on how the next few sessions play out. It is entirely possible that tomorrow we come up and we touch the EMA 20 again, and then that comes and then bounces down, or that tomorrow we come down and we challenge this EMA 8 again, and then we float back up. And if that happens, then we're looking at a scenario where we might chop sideways for a little bit before deciding which direction to go. In any case, it's looking like that EMA 20 is doing okay of a job as a resistance for now. So we may or may not make it all the way to the MA 50. So right now, there's not a huge amount of clarity in the direction. What we do know for sure is that to the upside, the probability of us moving very high or moving above that MA 50 is quite low. So we're either going to chop around for a little bit or we're going to come back down. If we look at the QQQ, and we see that a similar story. It didn't quite make it nearly as close to the EMA 20, only about halfway between the EMA 8 and the EMA 20, and then we came back down and we're sitting on top of the EMA 8 right here. Over here, so a little bit lower than what we have on the SPY. If we look at the Dow Jones, then we basically stayed right around this EMA 20. So again, the EMA 20 is serving as a resistance in all three major indices, and that's kind of why it's not clear. We could chop, we could move up and then get stopped out by the MA 50, or we could come back down and resume our downtrend from here. So in any case, we are still expecting the overall downward movement. If we have a pause, then that's actually kind of okay because it gives us time to get into position. So we tried to get into position in some of our portfolios today, didn't quite make it, and so now it just means we have more opportunity, more opportunity to catch the next wave down. So if we look at, let's look at our VIX. Our VIX is a little bit up, but just a baby bit, not much, nothing to get too excited about, and it's appropriate for such a small movement day. And the low volatility in terms of the VIX, low volatility in terms of price range. We have low volume. So even at this point, a couple hours after the market close, we should have full volume data right now. And so you can see that we're pretty well below that moving average today, or not moving average, average volume today. So what's happening is we're waiting, we're pausing. Why? Because we have major economic news reports tomorrow. We've got that GDP, which is going to be really big, very important to see. International trades and goods, that's pretty important, but GDP is the big giant in the room. That's the one that everyone is pausing and waiting for. Plus, we've got Meta earnings. Was that after market or before market? Let's take a look at Meta. Meta. Okay, so it looks like there's some big movement to the downside on Meta. So that's going to drag on the markets tomorrow. And that makes it a little bit more likely that we can come down and maybe break back below that EMA 8 and start moving downwards tomorrow. Other than that, we were looking at that sector rotation where it looked like money was going into the tech stocks, but after Meta, that could completely reverse itself. So tomorrow to the upside, if you want to look for opportunities to the upside, it's most likely going to be in industrials, in the staples, the safer, lower risk sectors. And then we're going to probably see money start to come back out of the tech sectors. So everything is playing out pretty much as expected. Like I said earlier today, everything is moving very technically. These news items, these GDP reports, all of this, yes, they have a role to play, but they are not the dominant force. There is a natural force that is beyond that, and sometimes these other forces can overcome it, but that natural force is constantly there. Sort of like the law of gravity is constantly in effect, and every once in a while we overcome bits and pieces of it and we can achieve flight. Like the law of lift can overcome the effect of gravity temporarily, but it always comes back. The gravity is constant. It does not stop operating. So right now the effect of gravity, or the effect of the natural forces in the market, are dominating, and there's not that much interference in terms of other forces. So really we're just looking at the highest likely scenario right now is that tomorrow we come down. We could float up to the EMA 20 at some point during the day tomorrow, but then overall the market direction would be downwards. That's our expectation. That's the higher probability event. I'm not saying that it's a guarantee. I'm just saying that from everything that we see right now, that is the higher probability possibility. So basically we'll just have to wake up tomorrow, see how our futures are doing, and then see how everything plays out. There's really not that much else to look at. We could take a quick look at TLT. We're right back down into this range, which is going to put pressure to stocks to the downside if bonds continue to move downwards. Look at that giant tail downwards. But tomorrow, if we resume action downwards, that's going to put pressure on the markets, the equity markets, and we could see those start to slip and go down further once again. So overall, we're just going to watch that VIX, just like we said earlier. If we move back up into this territory, or if we can just wave down here for a while. Right now it is looking more like we're going to head back up into this 17, 18, 19 range. I don't know about all the way to 2021, but at the very least it looks like we could move a couple points higher on the volatility. We're getting some pressure from TLT, from bonds. And let's take a quick look at the US dollar. The US dollar is maybe looking like it could bounce from here and resume its upward movement. And if that's the case, that puts pressure on stocks as well, and we could see downward movement in stocks. So overall, everything is still playing out the way that we were expecting it. And tomorrow, we're going to expect to either move up to that EMA 20 and pause there, or we're going to move up to the EMA 20 and bounce back downwards, or we could just go straight down, because we are pretty close to that EMA 20, close enough to call it the EMA 20 region. All right, so that's it for today. Basically, position your portfolios, get ready for downward movement. If you disagree and you think that it might move upwards, well, you have to hopefully at least agree that there is a higher degree of risk right now that potentially moving to the downside, so you would hedge your portfolio. So either hedge your portfolios, or now is a great time to start taking positions to the short side.